So the Fed chairman will step down from his helm in 2 days' time. Let's bring in Peter Cardillo, chief market economist of Rockwell Global Capital, who joins us from New York in a short while, and Mr. Li Yong, vice chairman of the China Association of International Trade here in Beijing, to talk more about Bernanke's achievements during, of course, a time of extreme uncertainty during his tenure. Mr. Li, so how do you think policymakers here in Asia view Bernanke's actions since the global financial crisis? We're, of course, already seeing some of the volatility caused by tapering really roiling emerging market economies.
I think when the QE was in force, most of the Asian countries were blaming Bernanke or the Fed by injecting excessive liquidity into the market by printing, by turning out the printing machine. That has also caused the Asian countries to have what is so-called imported inflation, and they also resulted in property bubbles. But when everybody now is talking about the exit of the QE, and the Fed is getting blamed again because this is going to result in the outflow of capital from the emerging market, from the Asian countries, which will result in probably a high interest rate and the burst of bubble of the property markets and so on. So the Fed is getting blames even when the QE started, and they are getting blames when the QE is going to exit.
Right. So you mentioned exiting QE is going to be absolutely a big question mark, I think, for the Fed. And a lot of people, analysts and investors, realize that you mentioned the expansion of the Fed's balance sheet. It is absolutely massive since the beginning of the global financial crisis. The Fed's balance sheet currently stands at about 4.1 trillion US dollars. Do you think they can really unwind without massive disturbances to global financial markets? Because, like you mentioned, we are already seeing these minor disturbances.
This is really kind of a very delicate issue because the exit of the QE is going to definitely cause the outflow of capital from the emerging markets, where the economic development is still vulnerable, and their development will be exposed to the threat of the outflow, and the capital costs will increase, as you mentioned earlier. It depends very much on how quick, for example, the Fed is going to exit the policy, and how they are going to deal with it. And also depends on how the U.S. is going to, how much weight, for example, the Fed is going to put on this impact, for example, on the external economies or on their own economies. If they put the emphasis on their own economies, I think the external economies will be affected more.
Right. In this very interconnected world of ours, we need more macro coordination from major central banks. I want to get the U.S. perspective on this as well. Let's head to Washington, D.C. and speak to Peter Cardillo. Peter, we're hearing story after story about Bernanke's legacy in the media these days. Do you think it's too soon, perhaps, to talk about the chairman's legacy, given the Federal Reserve is still purchasing 75 billion US dollars of mortgage-backed securities and treasuries, most likely 65 billion after this latest FOMC meeting? Might he do something special at his last policy meeting, you think?
No, I don't think so. I don't think he's going to depart from pulling back on stimulants. I'm looking for him to announce a 10 billion cut, 5 and 5 as the last time, and I think he's going to continue to say that the economy is going to improve. So I don't think he's going to do anything that's going to disturb the markets, and I think that, as far as his legacy is concerned, there's no question that he's been a great Fed chairman. I mean, he took the helm of the Federal Reserve at a time that we were headed for a depression and not a great recession as we went through. And thanks to the actions of the Federal Reserve, that today, the economy is growing and the global economy is back on track. So I think his legacy is going to be one of perhaps one of the best Fed chairmen that this country has ever had.
Okay, Peter, so the Fed may have stabilized the situation in the short term, but is the financial system safer, you think, in the long run from the Fed's unconventional measures?
Well, look, there's no question that when the Fed unwinds its balance sheet, that